Welcome back to the deep dive. Today, we're jumping into a sector that's, well, it's absolutely critical to our daily lives, but honestly, it often flies completely under the radar. We're talking about the global ingredients market. Think of this as your essential shortcut, really, to understanding the powerful forces, sometimes surprising ones, shaping everything you eat and consume. Now, all the insights we're diving into today, they come straight from the expert analysis of cognitive market research. They've given us some really fascinating sources that map out this whole landscape. It's quite something. And the research makes it really clear this market isn't just, getting bigger, it's changing fast. We're seeing constant innovation, big shifts in what consumers like you actually want, and naturally, a whole lot of global challenges mixed in. So, what's the plan for this deep dive? We're going to unpack the key things driving its growth first. Then we'll switch gears, look at the significant hurdles holding it back, and finally explore the really exciting trends shaping its future. Why should you care? Well, because these insights, they directly influence everything, from your grocery list to the latest health fads you hear about. Okay, let's get into it.
Yeah, it's fascinating how it all links together. Let's start with those drivers, those growth engines. The research really highlights the increasing demand for, well, nutritious and functional ingredients. That's a huge one. We're seeing consumers become way more health conscious. They're actively looking for stuff like probiotics, good for gut health, or antioxidants, things that protect cells, and proteins, dietary fiber. The list goes on. But the key insight here isn't just that people want healthy food. It's deeper. They're pushing the entire industry towards ingredients that might actually, treat or prevent conditions. It's blurring that line between food and medicine right there on the supermarket shelf. And this demand is boosting growth across food, beverages, even dietary supplements.
That is a huge shift, isn't it? From just tasting good to actually doing good for your body. Profound. And sort of connected to that, another major driver is just the sheer boom in packaged and processed foods. Think about it. Ready to eat meals, frozen stuff, bakery goods, dairy products. The world's leaning more and more into convenience. And that directly means more demand for things like preservatives, to make things last longer. Sweeteners for taste, obviously. Emulsifiers, the things that mix oil and water. Food colorants, too. The reasons are pretty clear, right? Faster city living, busier lives, that whole on-the-go culture really reflects how our lives have changed.
Absolutely. That convenience piece is massive. And the third key driver, this is where it gets really interesting, is ingredient engineering and R&D. Because of big advancements in food science, biotechnology, companies can now create solutions that are clean label, allergy-free, plant-based. These innovations aren't just about meeting what consumers say they want. They're also helping brands deal with stricter rules and ethical standards. It's not just about adding a new powder here or there. It's forcing a complete rethink of supply chains, product development, everything. It's a massive push forward for the whole industry, really.
Okay, so we've got innovation, changing lifestyles, really powering things forward. But you mentioned speed bumps earlier, and the cognitive market research data does point to some big restraints. What's the main hurdle companies are up against right now?
Yeah, that would definitely be the strict labeling and regulation side of things. I mean, these really thorough approval processes by bodies like the FDA in the US, ESSA over in Europe, FSSAI in India. They're the watchdogs, right? They're absolute vital for keeping consumers safe, no question. But they definitely increase costs for businesses. Operational costs go up. And they can seriously slow down how fast new ideas, new innovations actually reach the market. Makes it much tougher for new products, even the really good ones, to get onto shelves quickly.
That makes total sense. Yeah, innovation is great, but getting it approved, getting it out there, that's a whole different challenge. And even when things do get approved, there's this other big external factor messing with stability.
Yeah.
The volatile supply chain, the
Yeah.
raw materials. How big an issue is that?
Oh, it's immense, huge. Supply chain disruptions, we've seen plenty of that lately, haven't we? Geopolitical instability, climate change, all of it directly hits the availability and the cost of basic raw materials. We're talking about things like plant extracts, dairy derivatives, essential oils, the building blocks.
Yeah.
These ups and downs create enormous pressure on sourcing,
Right.
on production costs, right across the board. It really shows how tangled up these huge global issues are with the price of our food every day. Wow. Yeah. And then finally, there's the consumer side again, concerns about allergens, artificial additives. That's still growing, right? People are looking much more closely at labels, scrutinizing ingredients like gluten, soy, nuts, those synthetic preservatives. And as consumers demand more transparency, more safety, we're seeing some traditional ingredients kind of get pushed aside. It impacts what manufacturers can even use. It sounds like consumers are almost becoming co-developers, telling companies what to put in. That's actually a great way to put it. Yeah.
their awareness, their choices.
Yeah.
It's a really powerful force shaping the market.
Okay, so we've covered what's pushing growth and what's kind of pumping the brakes. Now let's look ahead, the future. The sources highlight some really fascinating trends shaping the global ingredients market. First one up, and you probably see this everywhere, is the massive rise of clean label and plant-based ingredients.
It's absolutely pervasive everywhere. Food, cosmetics, nutraceuticals, you name it. Consumers increasingly want products that are, natural, minimally processed, free from synthetic stuff. And this trend, it's not just a fad, it's forcing manufacturers to completely reformulate products they already have and to innovate totally new ones just to meet this demand for cleaner options. It feels like a systemic shift, more than just marketing.
Yeah.
It really does feel that way. And another trend, which is fascinating, is the rise of custom formulations, personalized nutrition. Because of advances in health data, tracking, brands are starting to offer ingredients tailored by age, gender, lifestyle, even where you live. And here's where it gets particularly interesting, this personalization. It's really strong in functional foods and supplements. It's blurring those lines between food and medicine even more.
Exactly, and that ties right back to that consumer desire for solutions designed specifically for them, for their body, their needs. You can almost imagine a future where your breakfast cereal gets tweaked daily based on your sleep tracker and yesterday's workout. That's a wild thought. Okay, and finally, there's this growing emphasis on ethical sourcing, sustainability. We're seeing companies really focus on traceable supply chains. Some are even using repurposed ingredients, which is interesting, and making sure fair trade practices are in place. Now, this isn't just about doing good anymore, is it? It seems like it's become crucial for aligning with ESG goals. It's a real competitive advantage in a market where people really value transparency and social responsibility. So wrapping things up a bit, whether you're deep in food tech and investor scouting opportunities, a product manager designing the next big thing, or maybe just someone curious about how our food systems work, this deep dive, I hope, has sort of illuminated that complex dance, between innovation, regulation, and what people actually want in the global ingredients market. It's a seriously dynamic sector. So much going on.
Indeed it is. And these trends we've discussed, clean label, personalized nutrition, ethical sourcing, they really point towards a future, don't they? A future where what we consume isn't just about filling up. It's about health. It's about knowing where it comes from. It's about the impact on the planet, which does raise a pretty important question for all of us, I think. How might these powerful forces continue to reshape not just our diets, but maybe our whole relationship with consumption and with the earth?
That's a really powerful question to leave folks with. And building on that,
Yeah.
given this huge push for clean label for plant-based, what traditional ingredients might actually fade away, become obsolete? And maybe even more intriguing, what completely new, surprising ingredients might pop up from advanced R&D, stuff we can't even imagine yet? How will that constant push-pull between strict rules and what consumers demand keep driving innovation? Or maybe, sometimes, even stifle it? Definitely something for you to think about next time you're reaching for a snack. Thank you so much for joining us on this deep dive. Stay curious and stay informed. Today, we're plunging into the really fascinating world of the global ingredients market. We'll be looking specifically at forecasts stretching from 2021 all the way out to 2033.
Quite a time frame.
It is, and our mission really is to cut through the mountain of data you've shared with us. We want to give you a clear, concise understanding of where this massive market is headed.
Yeah, region by region, country by country.
Exactly, and these aren't just, dry numbers. They're snapshots of global trends, consumer demands, and some incredible opportunities, too.
Absolutely.
So just to set the scene, let's talk scale. In 2021, global ingredients market revenue was already huge, $933.71 billion.
Wow.
Yeah. It then grew to $1,103.4 billion. That's over $1.1 trillion by 2025.
Okay.
And it's expected to reach an even more immense $1,540.9 billion by 2033.
That's quite a trajectory.
It really is. That's a compound annual growth rate, the CAGR, of 4.263% over that whole period. And just for clarity, when we talk ingredients, we're primarily looking at food and beverage components, but also pharmaceuticals, cosmetics, industrial stuff is broad.
Right. And what's truly compelling here, I think, is how this overall global growth isn't just some abstract number. It's a direct reflection of dynamic shifts across so many industries. Think about the push for plant-based alternatives, the demand for functional ingredients in health, or even like advancements in sustainable packaging materials, which need specific inputs.
Good point.
And critically, it highlights these ever-evolving consumer demands worldwide. This sort of macro view really sets the stage for understanding the regional nuances we're about to explore.
Definitely.
Because, yeah, not everyone is growing at the same pace or even for the same reasons.
Okay, let's unpack this then. First, let's take a look at North America. Now, this is definitely a mature market, but don't let that fool you. It shows steady, pretty significant growth.
Yeah.
The region saw sales of $266.107 billion back in 2021,
Okay.
rising to $300.297 billion by 2025. And the projection, over $409 billion by 2033. That's with a respectable CAGR of 3.666%.
That's right. And within North America, the U.S., unsurprisingly, continues to be the dominant force. It's projected to reach over $330 billion by 2033.
Big number.
It is. But what's particularly interesting, I think, is Canada's trajectory. While it's smaller, it's actually expected to show the region's highest TAGR.
Oh, interesting.
Yeah, at 4.316%, climbing from just over $31 billion in 2021 to projected over $52 billion by 2033.
So what might be behind that faster growth in Canada?
Well, it could be indicative of strong innovation, maybe in areas like health and wellness ingredients or perhaps a rapidly evolving food processing sector up there.
It stands out.
Yeah.
That's a great point about Canada, and it is a good example, like you said, of how even in a mature market, you can find these pockets of higher growth.
Exactly.
And Mexico also shows a solid upward trend, expected to grow to nearly $27.3 billion by 2033. That's a 3.882% CAGR. So for you, what does this kind of consistent, significant growth in North America tell us? I mean, about the stability and the ongoing innovation in these established markets.
Well, I think it suggests that even without, the explosive growth maybe seen in some developing economies, North America maintains this really robust underlying demand.
Right.
Innovation here often centers on things like premiumization, functional benefits, sustainability. Companies are investing heavily in R&D for novel ingredients, trying to meet those consumer preferences for healthier, more transparent products.
Okay.
It's about refinement and efficiency as much as pure expansion, and that's why we see such stable, albeit maybe moderate, growth.
Makes sense. Now let's transition over to the European market. This presents a far more diverse picture in terms of growth rates.
Yes, definitely more varied.
Overall, Europe's market was $179.272 billion in 2021. It's forecasted to hit over $277 billion in 2033, growing at a 3.767% AGR overall.
Yeah, and what's fascinating here, as you said, is the varied growth across European nations. It truly highlights the different market dynamics at play. You see strong, mature economies performing well, while others show, more constrained growth.
Right. Germany, for instance, shows a particularly strong performance. It's projected to rise to $59.3 billion by 2033. That's Europe's highest tier AGR, actually, at 4.454%. That's a significant jump.
Exactly. Germany's robust industrial base, that strong emphasis on quality, technological advancement, that likely plays a big role there.
Okay.
But in contrast, you see slower growth rates in some other major European economies, like France, projected at a 3.233% CEAGR.
Lower. Yeah.
And notably, Russia has the lowest CAGR in Europe in this forecast, just 2.42%. Growing from about $10.5 billion to nearly $14 billion. And this likely reflects differing economic conditions, maybe regulatory environments, perhaps even geopolitical factors influencing investment and consumer spending, specifically in the ingredients sector there.
So we have the leaders like Germany, but the data also shows, a lot of other European markets contributing significantly, like the UK, over 4% AGR.
Right.
Italy and Spain growing steadily too, Sweden, Denmark, Switzerland. Even Luxembourg has its own trajectory. And then there's the rest of Europe category still showing decent growth. It's a real mixed bag.
It really is. I think the key takeaway for Europe is its heterogeneity. Companies operating there need to understand not just the regional total, but the specific market drivers, the consumer preferences, really, in each individual country.
Right.
There's just no one-size-fits-all strategy when you've got such a wide range of growth rates and market maturity levels.
Okay, now, here's where it gets really interesting. Asia Pacific. APAC.
Ah, yes, the growth engine.
Absolutely. It's not just growing, it's actually leading global growth. This region moved from over $332 billion in 2021 to an impressive $590.165 billion projected by 2033. That's boasting a strong CAGR of 4.91%.
Huge numbers.
It's almost half the predicted global market by 2033.
And if we connect this to the bigger picture, APAC's robust performance positions it as the key driver for the entire global ingredients market. This incredible scale, the speed of expansion, It's truly transformative.
What's behind it?
Well, you've got massive populations, rising middle classes, rapid urbanization, and just increasing demand for processed foods, consumer goods, everything that uses ingredients.
Right, and within APAC, China, as you might expect, is the dominant market.
Of course.
It topped the list at nearly $97 billion back in 2021, and it's projected to reach a massive $175.574 billion by 2033. That's with a 5.11% CAGR.
Very strong. But, the real standout performer, maybe surprisingly to some in the entire report, is India.
Ah, okay. Tell me about India.
It's growing from around $43.5 billion in 2021 to over $85.5 billion projected by 2033. That boasts the highest overall CAGR in the entire global report.
Wow. What's the number?
At a remarkable 5.803%.
5.8%. That's huge.
It truly highlights India's emergence as a major global economic force.
Right.
You have its expanding food processing industry, changing dietary habits, a massive young population. It's just creating unprecedented demand for all sorts of ingredients.
Incredible. And we're seeing other robust growth areas in the region too, right?
Absolutely.
Like Singapore, for instance, projected to more than double its market by 2033.
Yeah, a 5.244% overall CAGR there.
And Southeast Asia as a whole looks incredibly strong. That shows a KGR of 5.391%, reaching nearly $56 billion. The dynamism in this whole region is, well, it's really something to watch.
Indeed. And
Yeah.
you still have other major markets like Japan and South Korea also contributing significantly to the overall APAC growth,
Right.
albeit with slightly lower but still very healthy
Yeah.
CGRs, the 4.2% range.
Yeah.
Australia, Taiwan, the rest of APAC, they're all growing strongly too.
So the takeaway is,
This entire region, APAC, it really represents the future growth engine for the global ingredients market, driven by sheer volume and just rapid economic development across the board.
okay. Moving on now to South America, another region showing some pretty dynamic growth. Its market grew from just over $70 billion in 2021, and it's projected to reach over $120 billion by 2033. That's at a healthy CAGR of 4.502%.
Yeah, respectable growth. And within South America, Argentina actually stands out. It has the leading KGR for the region at 5.035%.
It's higher than the regional average.
Exactly, climbing from about $12.4 billion to over $22 billion projected. Now, the report doesn't detail specifics why, but often we see this kind of surge in South American markets tied to maybe a burgeoning middle class.
Right.
Increased demand for value-added food products, maybe a growing consumer health and beauty sector driving the need for more specialized ingredients.
Okay. And Brazil, still the giant there.
Brazil remains the region's largest market, yes. Growth from nearly $28 billion to over $46.5 billion projected. That reflects a 4.374% CAGR. Solid growth.
And others.
And other South American countries like Colombia, Peru,
Right.
Chile. They're also contributing significantly to this regional expansion, all showing KGRs well over 3.9%. So this collective growth, it suggests a broader economic uplift, maybe ongoing industrialization across the continent, which naturally leads to increased demand for diverse ingredients.
Makes sense. All right, finally, let's conclude with the Middle East market figures. These also show steady expansion.
Another area of solid growth.
This market moved from just over $54 billion in 2021, and it's on its way to over $91 billion by 2033. The CAGR there is 4.423%.
Right. And Saudi Arabia is a significant contributor to this growth. It's projected to rise from over $12 billion to over $20.8 billion. That's a 4.52% CAGR.
So slightly above the regional average again.
Exactly. This indicates likely significant investment and development in its ingredient-related sectors, often linked maybe to national food security initiatives or diversification efforts away from oil, which we know is a big focus there.
Interesting link. And for Turkey, the available data we had showed it went from just under $10.7 billion in 2021 to over $12.8 billion by 2025. The full 2033 projection wasn't quite as detailed in our sources, but it clearly indicates a growing market in that interim period.
Absolutely. I think the Middle East as a whole, driven by population growth and continued economic development, is an important region to watch for sustained, if not, explosive like APAC, but certainly sustained growth in the ingredients sector.
Okay. So, pulling it all together, what does this all mean? Our deep dive into these forecasts, it paints a really compelling picture, doesn't it? A global ingredients market that's not just growing, but evolving at really significantly different speeds in different parts of the world.
Precisely. The The incredible dynamism we see in regions like APAC, particularly India, with that standout growth,
Mm-hmm.
it stands in stark contrast to the, let's say, steady, strong performance in North America.
Mm-hmm.
And then you have the much more diverse, varied landscape of Europe,
Yep.
with its mix of high and low growth countries. It just reiterates that understanding these regional and sometimes even country-specific nuances is absolutely key to truly grasping the global market. There really isn't a one-size-fits-all approach, is there? Not for navigating this complex, very interconnected industry.
Definitely not. So maybe a final thought for you, our listeners, to mull over. Considering these diverse growth rates and market sizes we've discussed, how might companies need to adapt their strategies? Thinking about approaching a rapidly expanding market like India versus, say, a more mature, maybe slower growing market in parts of Europe or North America.
That's a great question.
And maybe also what new ingredient innovations, perhaps not even fully on the radar yet, might drive the next wave of growth that we'll see reflected in these kinds of numbers down the line. Something to think about.